Okay, this pump has lost a little bit of steam. We're at 21,400. We were at 22,000. Okay, this pump has lost a little bit of steam. We're at 21,400. We were at 22,000. Okay, I'm back. So we are losing steam on this pump. Big question is whether this pump will hold or whether the pump won't hold. We also have the dollar index flying, 107. It was as high as 107.2. Today, it's a different kind of banter. It's a banter where we're talking to traders. We've got hardcore traders here on the show doing a Friday banter. So less about the macro talk and more about getting into the charts, talking about the best trades that one can be making right now. So it's going to be fun. It's going to be a big show. And today I promised that I'd play a different song before we start the show. So let's do it.
He's our man. If he can't do it, no one can. He's our man. If he can't do it, no one can. He's our man. If he can't do it, no one can. He's our man. If he can't do it, no one can.
Okay, well, that was quite abrupt. All right, welcome back, guys. I'm Crypto Man Run, bringing you crypto love and crypto wisdom. Friday afternoon here, Friday morning, we're in the United States. We're bringing you charts, trading. That's what this banter is all about. I think we've had enough about talking about the macro. We want to just get into the meat of it. And I think today there's a lot to discuss. I think one thing that we will discuss over and above the charts is the Mt.Gox Bitcoin, because there are 150,000 Bitcoin that are potentially coming onto the market as soon as August. And the question is, what kind of effect will those 150,000 Bitcoin actually have on the price? Remember that when Luna sold their Bitcoin, they had about 80,000 Bitcoin. That knocked the price pretty significantly. Well, now you're looking at Mt.Gox, and Mt.Gox has 150,000 Bitcoin. So let's quickly just rewind for those of you who don't know what Mt.Gox is. Mt.Gox was one of the biggest exchanges. In fact, it was probably the only exchange back in the old days, in around 2014. And in 2014, there was a big hack on Mt.Gox. I think about 800,000 Bitcoin were hacked. But they found 200,000 Bitcoin stored somewhere else on the exchange, on some kind of other drive on the exchange. And that was given to the liquidators in Japan. Now, those liquidators have been following a process in Japan to finish the liquidation, so to speak, and it was awarded to a trust. And now the trust has permission, or has the objective or the mandate to refund the holders of those Bitcoin in proportion to the Bitcoin that they have left, and to return the Bitcoin to the market. And that means that about 150,000 Bitcoin may hit the market starting from August. So you can read this all in a whole lot of documents that come out of Japan. So these are all translated documents, and I've read as much as I can out of these documents, and it does look like about 150,000 Bitcoin are going to be hitting the market, and also 142,846 BCH Bitcoin Cash. Now you can imagine that if 150,000 Bitcoin hit the market, that's going to make a big hit. But can you imagine what's going to happen when you put in 142,846 Bitcoin Cash into the market? That's going to cause a disaster. So the question is, why hasn't that hit the price yet? What is the market seeing that we're not seeing? So that's one of the things that we're going to discuss today. And then I think it's going to be a lot of today is going to be all about the charts. It's going to be about charts, and what the next trade is. So let's do this. If you're new to the channel, subscribe to the channel. Let's get the show on the road. If you are one of the members of the Banter fam, subscribe, like, hit the bell notification. It's our Friday Banter. It's our big banter. And remember that our Friday Banters are brought to you by NordVPN. They are sponsor for the Friday Banters. I've said to you guys before, if you survive the bear market and then you make a silly mistake like not protecting your crypto, that's crazy. And that's why we use NordVPN. I'll also show you in a second why I had to use NordVPN today to read something that was in the United States. So I couldn't read a document that was only available for people in the United States. So what I do, I switched on my VPN, told the VPN I was in the United States, downloaded the entire Celsius court case against Celsius, and then went into a different country so that they wouldn't recognize me. So if you do want a VPN to protect your crypto, use the referral link below. That'll give you a special on NordVPN. Remember, it does hide your IP address when you use it, so you can pretend that you're in a different country, and you can mask yourself from hackers, etc. And I think that the special is about $3 to protect your crypto. So if you want to grab the deal, click the grab the deal button, and I think it costs about $3.16 a month or $3.83 a month to protect your cryptos. Cool. So that is the housekeeping out the way. Without further ado, let's get into the charts. We've got some old friends, some new friends coming onto the show. First of all, we've got Gareth. Gareth, welcome back, my friend.
Hey, thanks for having me back.
Looks like you've had a good trade. Your trading screens are back, which is amazing. Alrighty, we've got Mike McGlone from Bloomberg. Mike, welcome back, my friend.
Hello, Rand. Thanks for having me back, and good looking forward to a little bit of discourse with you and Garrett.
You know why I brought you here?
Why is that? My hair?
Well, because the last time you were here, you said that you would only be in the dollar, and you would only be in the dollar, and you would only be in the dollar, and now I look at the dollar chart, and I wanted to say that you were right to only be in the dollar.
Well, I do appreciate remembering a few that I get right, because I get a lot wrong. But that's the cool thing about what I do here. I've been with Gareth. I've been a trader. I've been buy side, sell side. In Bloomberg, I'm just paid to get it right and get it out to the terminal, trickle down the events like this, which I love. But the key thing to always remember about the bucks, first off, how you're measuring there, that's a Dixie. That's mostly against the euro. I used to like to watch a trade-weighted broad Dow, which is based on trade, and it's been going up for 50, 60, 70 years with a few blips. And I always like to say, okay, when you measure the dollar, it's a piece of paper, it's fiat currency. Give me a better currency. Give me a basket of better currencies. And that's the bottom line, particularly if a war going on in Europe, the Fed raising rates. The dollar is the only way to go in the long term. That's up.
We've got a lot to talk about. And today we've also got a new friend with us. His name is Sven Henrich. He is from Northman Traders. Sven, welcome, man.
Welcome. Glad to be with you. Look at all those fancy screens. I only got trees behind me.
Man, you got the best background, though.
Yeah, for real.
Friday background. I'm in. Happy hour.
Then is your background's a screen, right? It's a green screen, right?
No, that's the real yard. So there you go.
Oh wow,
it's beautiful weather in England. So.
All right, guys. I think let's kick off the show, and I think the most for us as crypto degens, I guess the first chart that we want to talk about is the Bitcoin chart, because we're finally having some kind of relief bounce. We haven't had a relief bounce like this for quite a while, and I think everyone's asking whether this bounce has more legs or whether this is another fake out. Very keen to hear your views, and I think let's start off with Gareth, because I know Gareth has called this right, but he's also been a bit of a perma bear in the last couple of months. I don't know. It's just I'm so scared to ask you, Gareth, but I'm going to ask you what do you think happens next year?
Well, first of all, perma bear, when you're right, I'm not sure if that's still being a perma bear, but either way, I mean, listen, we had to have this kind of .com moment for the crypto market. I don't think it's fully over yet, but I am long Bitcoin right now. You know, I got in right around this area, 2017 highs. So far, I like the price action around here. It keeps on dipping below that 2017 high and recovering. And then, you know, I'm also, you know, maybe a little opposite of Mike here, where I actually think the dollar is topping out today, potentially. We're seeing some issues with the dollar where you got this strong jobs number this morning and the dollar is actually reversing the early gains. And anytime you see reversals, so bullish on the jobs number and the dollar's not responding or giving up those gains, that could be an issue there. By the way, same thing with Bitcoin. We heard about Voyager's collapse and Bitcoin price didn't collapse. And you just mentioned Mt.Gox and price isn't going down. So price is very much the truth. And so I'm bullish short-term Bitcoin here.
Yeah, I mean, I find it very interesting that the market isn't responding to Mt.Gox, because that is, I mean, it's probably one of the biggest Bitcoin holders out there. It would probably be Grayscale, and then under Grayscale would probably be Michael Saylor. And then under Michael Saylor is the Mt.Gox liquidator. And if he's saying that from August, he's going to be dripping Bitcoin into the market and refunding all the affected Mt.Gox holders, that's a big number of Bitcoin coming into the market. I mean, if we're celebrating a supply cut, which is a halving from 12.5 to 6.25, and now we're getting another 150,000 Bitcoin into the free market, that sounds a little scary to me. I'm very surprised the market hasn't moved like much harder on that.
Yeah, no, I agree with you, but I think that's telling us something. And listen, the Mt.Gox stuff, let's be fair, Rand, I'm sure you already coordinated, you're going to buy that 150,000 Bitcoin, so no one cares, you know, they know it's going to be soaked up by you. But But I think short term, my upside target here is 25.5, maybe 28,000. And then ultimately, I hate to be that perma bear, midterm bear, but I think you got another leg down to 12 to 13,000.
Sorry?
What?
12 to what? 12
to 13,000 on Bitcoin, I think by November, December.
Wow. Okay. I've got a very different thesis to you, but before we talk about my thesis, Sven, as a newbie to our show, we have to give you the baptism of fire. What do you think of this Bitcoin bounce that we're seeing now? Real bounce, not real bounce?
Well, first of all, let me go back to the larger trend that actually has held. I can maybe share a chart.
Yeah,
I've never done this here before. So
the share screen button on the bottom.
Yeah, I see it, and then I guess share screen, right? And let's see what happens. Can you guys see this chart?
Not yet.
Yes? No chart.
Just press the share. If you press the share screen button, and then it should pop up on my screen. I'm still getting over Gareth 12,000. My heart's still shaking from Gareth 12,000. While he's getting that, Mike, I want to just quickly go to your tweet here. I read this tweet and I was like, wow, okay. You said Bitcoin could be one of the greatest bull markets in history, or at a relatively discounted price to start the second half, or crypto may be a failing experiment in the process of being made redundant. I mean, what a choice of words.
Well, it's my bias is it's going to be the greatest bull market in history, and it's at a discount. And that's kind of what I'm showing. I don't know if you probably shouldn't be able to see my screen. And that is the key thing that's really happened this year is Bitcoin is at a pretty significant discount to its, I'll show you the full chart. I'm just showing that right up there, to its 100-week moving average. And if you overlay that to crude oil, one thing about Bitcoin and crude oil this year is crude oil is being made redundant. Let's put it this way. Crude oil is still below the peak in 2008. If that happened in Bitcoin, we would not be here right now talking about Bitcoin. And that's just one of the greatest bear markets in history. It bumped up to its highest level versus 100-week moving average in futures history. And Bitcoin, as I show in this chart, is just at a normal discount in a bull market. And I look at it as, okay, it's a discounted bull market. Gareth might be right. I hope he's wrong. I fully expect he'll be wrong. And eventually Bitcoin gets to $100,000. But if Bitcoin goes to that low, just imagine where the stock market is going and risk assets. And that to me is what's happening so far this year. Is we're in the midst of one of the greatest risk asset reversions we've ever seen. We've wiped off $25 trillion off of global equities. Bitcoin's a rounding error amidst that. I mean, what do we have? About $1 trillion left in cryptos, except they're the fastest horse in the race, and it's where they're going forward. So what I see, I'm showing this chart, big picture for investors. As an ex-trader, I respect traders like Northman and Gareth. I'm one of those guys now to look at it. I'm looking at the macro. The big picture is supposed to be buying and investing in Bitcoin and probably selling crude oil in terms of the macro. Biggest bull market in history at a discount, one of the biggest bear markets in history at a premium.
But isn't crude oil a function of Russia at the moment? Isn't crude oil all a function of the Russia-Ukraine tensions and how quickly they can resolve them? Because, I mean, for as long as there is a war in Russia and Ukraine, crude oil is going to continue to go up. Yes, we're getting some temporary relief. And the way I see it, we're getting temporary relief because of two things. One is we're getting temporary relief because we've got a very strong dollar. So relative to dollar, crude oil is going down. And the second reason is because I think Powell has managed to scare the market into thinking that we may actually be getting a pretty serious recession. And so people are saying, okay, hold on, we're probably not going to need as much crude oil. And so they're thinking that there may be a demand slowdown in oil. And that's why we're probably looking at a decline in crude oil. But net, you got to look at oil and you got to say, look, oil is still over $100 a barrel. In fact, something like $103 a barrel. That's not a cheap oil price.
So what oil normally does, it pumps and it dumps. To sustain above these prices is called something's different this time. So I was in the trading pits in Chicago when Saddam Hussein invaded Kuwait. Crude oil pumped from 20 to 40, stayed there for a while, went back down to 20, took 13 years to get above 40. And that's when the U.S. was the largest net importer. Now the U.S. is the largest producer of energy, largest net exporter of LNG, and a net exporter of liquid fuels. The world's changed. What's happening with Russia's supplies, it's creating a global recession. In the worst case, what happens is usually higher prices either cure, they go back down. And that's the big difference with Bitcoin. When you're a commodity guy like me, there's no elasticity supply. The elasticity supply is kicking in crude oil. It's a matter of time. And the elasticity demand is crushing global equities. It's enforcing the Fed to raise rates more. It's going back to 50, in my view. It's more likely to go back to 50 than 150. And that's not profound because that's what it always has done in history when it pumps this much. Yes, there's a war, but that supply from Russia is not going away. It's going mostly to China and India, and it's just the discombobulation pattern in the meantime. What it's actually doing is accelerating this global recession, which I think was going to happen anyhow. And now we have every central bank in the world trying to catch up to the Fed, which is dollar strong, bad for the economy. And in the way I see it working out is this is all going to revert back to deflation. Bitcoin, gold, and U.S. long bonds will probably be some of the best performers, but it's not happening yet. Okay. It's going to be, that's the macro.
Lots to talk about. Sven, are you managing to share your chart there?
No, I suck apparently. So here's what I'll do is I'll put out the charts I intend to show with you guys today on my Twitter feed later today, Northman Trader, in a Northcast. But I'll talk about them conceptually. First of all, on Bitcoin itself, and we see the same thing in Ethereum. Actually, with all the dramatic weakness we've seen, the long-term trend has held. But we got to be mindful. This is all still tied to global liquidity. Currently have a 95% correlation. So unless you see equities move up, Bitcoin is going to continue to be under pressure as well. So the trend right now is just about 17,500. That's basically where we hit below. So it was kind of, and I'll just point this out in general. I've loved Bitcoin simply for the fact that it is trading technically very cleanly. You could chart it very well. It respects pattern, it respects levels, and so forth. So from that perspective, so far, nothing dramatic, even though it all looks dramatic. We basically got back to the 2017 highs. Problem is short term, I can point to a bear flag again, and obviously equities are not out of the woods, and hence it is given the correlation. You got to be mindful what's going on with equities. You got to be mindful what's going on the macro front. And there, the dollar, as mentioned before, the yields in general, the 10-year in particular, in junk. I call it the trifecta. You see them being an influence on markets every single day. And hence we cannot be aware of what's happening in terms of the macro developments. Obviously, the Fed is very much keen to at least present a picture of being very aggressive. However, as much as they talk, there are limitations to what they can actually do. And so we need to be mindful of that development because economic growth is slowing down for sure. The wealth effect that has just been destroyed in the last 6 months is the most dramatic we've ever seen. All this will filter into consumer spending, and you got to differentiate them between lagging indicators and forward indicators. And I think ultimately the Fed will be forced to pivot, even though they don't sound like it at all right now. We've seen that movie before as well.
So I must say, I've been trolling you on Twitter, and I see that you've been trolling the Fed on Twitter, saying, "Look, surprise, they're not going to be able to do as much tightening as they want to be doing." But on the other hand, you got Powell, and Powell's come out and said, "Listen, I'm protecting inflation at all costs, even if it comes at the cost of a recession. All I care about is inflation, and I want to get the numbers down. And until we see the numbers get down to reasonable levels, I'm not going to take my foot off the pedal here." At the same time, he said he was going to front load a lot of it. So we had 75 basis points last month at the FOMC meeting. I think it's given that we're getting 75 basis points at this FOMC meeting. What happens after that?
Well, interestingly enough, if you look at the macro construct, and this is, I think, really important for all of us to recognize, there's a very clear trend in place over the last 30, 40 years, which is the Fed can raise rates only to ever lower highs. Why? Because we've been building our global financial structure on ever more debt and cheap money. In 2018, they managed to get the Fed funds rate to about 2.25%, and it was lights out. Why? because we had moved from $5 trillion to $20 trillion in debt, and markets are reactive to it. So the Fed funds rate got to 2.25. The 10-year yield got to 3.2% in the fall of 2018. That was it. It hit its long-term trend. It reversed. The Fed was ultimately forced to pivot after markets dropped 20%, and they were concerned about that. And here we are, 4 years later, with $9 trillion in more debt on top of this. And already we're seeing markets in the economy reacting to the incredible velocity we've seen in recent months, with the 10-year yield going to 3.5%. Hence, we're in a bear market. It's still all sending the same signal. So the Fed, which, by the way, in December had a Fed funds rate for this year of less than 1%, while CPI was at 7%. Tells you how much you can rely on their forecasts and projections. Now they want to go to 3.8% by next year. Ain't going to happen, because that's, or at least it's not compatible with a positive growing economy. So there's something fundamentally off here. You cannot have a 3.8% funds rate given our global financial construct and also project positive GDP growth. Second, and this is really important, what the Fed is trying to do now with its heavy tightening talk. First of all, it's jawboning. This is kind of the preferred method. Jawbone the market as much as you can without actually tightening to the point where you're trying to aim at. And then the other key point here is Russia, Ukraine, right? Food and energy price inflation, they do not impact with rate hikes at all. What they are doing is they're going to impact the housing market. They're going to slow the other demand down. But basically, consumers that are already hurting dramatically from inflation, they're going to get hurt again by the Fed. And so the path to avoiding a recession gets ever more narrow by the day. And I think in the last week or two, when you saw that dramatic reversal in the 10-year yield breaking its uptrend, actually, is sending a message to the market. It's sending a message to the Fed. And the market's already not believing the Fed that it will get to 3.8%. It's already telling you this. It's already telling you the recession risk is increasing. So there's a disconnect between what the Fed publicly says, what the market's already pricing in, which is rate cuts next year.
But I mean, if you're sitting in Jerome Powell's shoes, your mandate is, you have two mandates. Your first mandate is employment, and your second mandate is inflation. You're scoring too highly on the employment mandate. Everyone has a job. There's too many jobs and not enough people looking for work, which is a very strong job market. And we've just seen that reaffirmed with the latest job numbers. And on the other hand, you're failing dismally on your inflation scorecard. Nowhere on the Fed's scorecard do they talk about recession. Nowhere do they talk about a strong stock market. Nowhere do they talk about economic growth. The Fed is single-minded, and that is protect inflation and just make sure that unemployment stays above a certain level.
Well,
yeah, they have the advantage. You have the advantage right now that there is still a very strong labor market, in the sense they can use that as a justification to raise rates. Although we're already seeing layoff announcements left, right, and center, and particularly in the tech sector. This dual mandate has basically been put them in a trap, if you will, because at the end of the day, last year inflation was already well above 2%, and they completely ignored their inflation mandate, price stability mandate, if you will, and they've been kind of slow crawling for it. Why? Because they inherently believed that it was going to be transitory. They kept talking all last year how inflation is going to come down by the end of last year, and it obviously didn't. And then the Russia-Ukraine situation has exacerbated it. It's all fine and good to want to bring inflation down, and they should, and the tightening conditions are already doing that. We're seeing this already in charts like copper and lumber and what have you. We're already seeing dramatic reductions. Supply chains, the Fed doesn't impact either. So to the extent that they're now raising rates aggressively and slowing the economy to a point that we're going into a hard recession, that's still not going to solve energy and food, right? As long as you have your Russia-Ukraine situation there. So I think they got to be very careful again that they're not misreading how quickly the economy is actually slowing down. And just to finish off on that note, just 2 weeks ago, Jay Powell and the entire Fed were talking about Q2 GDP improving vis-a-vis Q1. But 2 weeks later, the Atlanta Fed came out and their own Q2 GDP forecast fell off a cliff down to -2%. Now we don't know where it's going to come in ultimately, but it shows very dramatic slowing down. And the risk is that they're over tightening again. And by the way, every recession in the last 30 years has come on a Fed tightening, right? So they're basically running us right into a recession, and then they're forced to pivot. The question is how quickly it will happen.
All right, let me pivot the discussion a little bit. And I mean, I'm not as experienced as you guys, but to me, when I look at a strong dollar, I look at the DXY, I say, okay, we've got a very strong dollar, which Mike called a while back. He called it, when it hadn't broken any of these resistances. And when I look at a strong dollar, I say to myself, maybe a strong dollar isn't such a bad thing. Because if we have a strong dollar for a short period of time, it makes energy cheaper. Making energy cheaper means lower inflation. Lower inflation means that the Fed gets an 8.3, 8.4% in August, maybe, and then when we get to September, and the lower gas prices and the lower energy prices actually filter in, all of a sudden you've got a pivot down in inflation. You've got an inflation number of all of a sudden 6.5 because the commodities charts look something like this now. So the commodities charts have had sharp declines. If I look at commodities charts when you price them in dollars, and I look at them from even beginning of June to where they are now, you're down 15%, which logically means that inflation should come down by about the same. So you could get this sharp ladder down in inflation. Isn't that why the markets are possibly responding positively to the stronger dollar?
So I got to respond on that one, Rand, because I got a bunch of charts I want to show you. That inflation is going to collapse, and it's going to stay down for a long time like it did in 1930. And Northman touched on this, and I'm going to show you a few charts to show that why. And that's just my view. So what I show you is that's just the Bloomberg Commodity Index, the 60-month rate of change. It's peaking. It's peaked. That's a 5-year average. At about the same level, a little bit below it did in 2008. Inflation collapsed after that. And one of the main reasons all asset classes pumped was that little orange line. That's U.S. money supply. It jumped the most in the history of mankind. Our database goes back to since before I was born, 1960. And it's going back. It's being taken away at a breakneck pace. We're seeing the amount of deflation coming out of risk assets. Cryptos, you're seeing it, that's a rounding error. 25 trillion coming out of equity markets. The bond market's collapsing. This is a deflation environment that's just getting started. And what the Fed's doing is the same thing they did in 1929. They're hiking into a massive correction. Now they have to because they created part of that. You see that from here. But I want to see also point out one of the key things that's why they have to hike. This is a chart going back over 100 years. I had it created this morning. Is what you see in white there. That's just the price of the stock market, the Dow Jones Industrials, divided by U.S. GDP. A lot of you have probably heard of the Warren Buffett model. It pumped up the most since basically right before the 1929 crash. That's the biggest problem, and that is we have the greatest amount exposure to equity markets in your average U.S. person ever. I mean, you can create to 1929, but they weren't trading Robinhood in 1929. It's just, that's how extreme it is, and that's the key inflection point. And that, to me, is where that deflation is coming from. You take away the ability for people to buy stuff, as Jim Bianco says, and you get a big collapse. And I want to end with this one little chart when it comes to the dollar, ropes, and cryptos, and that is, when I have to mention the dollar. Okay, that's the U.S., but give me a better mousetrap, a better situation than U.S. You look over at Europe. Here's the way I like Larry Summers describing about the dollar. If you look at Europe, it's a museum. What's another competitor? Japan, it's an old people's home. China, it's a prison. And then there's Bitcoin, the experiment. What has the best potential in the next 10, 20 years to really do better than the dollar? So I'll end with this. What I show you here, that's just crypto dollars. People call them stablecoins. I mean, let's call them what they are. They all track the buck. And that's in white, that's just the total market cap of crypto dollars versus the total market cap of crypto assets. It's almost 20%. It's not so much what it is, it's what is that trend. In bull markets and bear markets, crypto dollars, they might curtail a little bit in bull markets, but they're continuing to become the massive part in the space. Why? Because the space organically has realized, okay, we want to trade in bucks in dollars, but we want to hold and invest in things like Bitcoin and build a network in things like an Ethereum. So, and I also show you this overlaid with the Bloomberg Galaxy Crypto Index. It's dropped almost 80%. Yeah, it can have more to go, but that's not a level you want to be too bearish. And that's what me is. I'm not a day trader. I look at it as an investor.
Gareth, what do you think? Strong dollar, good or bad? Do you agree with my theory or not?
I mean, I think for the stock market right now, we're seeing an inverse relationship with the dollar. I think that we saw this morning when the jobs report came out, futures fell lower. It was a strong number, so the dollar popped up, or we saw the dollar rally, and then the dollar's actually started to reverse here, and it's coming off some major resistance levels. So I think actually the markets have returned and basically are positive on the day now on the S&P and the Nasdaq. But I wanted to show you something on the dollar. So right now I'm long gold, I'm long silver, I'm long Bitcoin, alternatives to the dollar, and the main reason I'm doing that is because there's a pretty clear confluence of trend lines here that we just are kind of hitting into on the DXY chart. So extended move short term, that should tell us we're going to get a little bit of a pullback here on the dollar. Again, I'm a shorter term investor, so swing trader, day trader, but I'm actually, again, like I said, long some of these commodities that have been beaten down in expectation of a pullback. So note those trend lines. And then if you look on the daily chart of the DXY, if you're a technician, this is something you're paying attention to. You have this little potential topping tail, which is a reversal signal on the DXY. So again, short term, I think the dollar is coming down. I think that, again, you're seeing good economic data kind of pushing that dollar higher, but at the same time, big money selling. When we see good information like the jobs report this morning, and the dollar is selling on that, that's telling me big money is starting to take profits in the dollar, and you probably see a reversal.
I would agree with that. We've been looking at dollar at probably a 108 target. We got very close this morning, and it is a pretty sizable reversal candle. And to your point, confluence support. The other part here is the ECB is going to be finally forced to intervene and actually start raising rates. They're woefully behind. And that'll play into the currency aspect as well, because as the Fed has been tightening and the ECB is not, obviously you saw the dollar rise and the euro continuing to drop as well. So I think that'll help as well. And to that extent, you can make the case actually for a larger bear market rally if you get a sustained move down in the dollar, and as long as yields don't go back to the levels they were. Because typically in big bear markets like 2000, 2008, you actually have these larger bear market rallies that we haven't had yet this year. And they typically tend to come when people, obviously through the pronounced lower highs and lower lows, get ever more bearish positioning, gets underexposed, if you will, and then people are not prepared for a larger bear market rally. So I still see that as a possibility, but we do need to see a sustained reversal in the dollar.
So Nick, I got to follow up on that one because I think that's spot on, Northman. And you described a global depressionary scenario. The world central banks are scrambling to catch up the Fed, with the exception of China, because they're pretty much in a recession. They're just not pointing out. They're using fiscal monetary stimulus to keep the GDP above par. So the whole world has to scramble. Emerging markets are getting hammered. Why? Because they're subject to the dollar, and their currencies are basically pieces of paper they're fading. But the key thing I think from you that pointed out is for the dollar to really go down versus other currencies, there's one key driver that's been pushing the dollar above most other equities in the past 10 years, and basically since 2011, and that is the U.S. stock market outperforming the world. What you described, for the dollar to really go down versus the rest of the world, it was basically a collapse in the U.S. stock market to lead lower like 1930, 1929. That if past patterns repeat. Otherwise, where are you going to put your money? I'm in Miami for a reason, partly because they say it's the South American money capital in the world, because everybody here gets it. Their currencies are melting. They want access to the States. The rest of the world's getting that bad. China's going negative. Russia's going negative. I look at it as this is the great beginning of a massive bull market for the U.S. overall, because what's our opposition? And Bitcoin's right in the middle there. The opposition is Russia and China together in this war. And the Bitcoin's right in the middle, and part of that is where I want to roll back in the Bitcoin. We have this, Loomis Gillibrand bill coming up. That is basically, to me, is what's the space. Every place I spoke to, people at SALT conferences and all these conferences, that's what they need. Just give us the rules. It's not going to be perfect, but it's completely the opposite of what's happening in China. And why? Because the U.S. is more likely to embrace this. And one key reason is the chart I showed you is because it enhances the value of the U.S., our sovereignty, and the dollar. And that's the key spot here where I look at it. If the dollar collapses, just imagine what it's going to take for that to happen. And what's it going to collapse against? Maybe against gold, maybe against Bitcoin, but versus another paper currency, give me a better one.
Yeah, that's actually true with the Bitcoin lack of regulatory clarity. I think that's right now, as we do have the high correlation with stocks. For me, the argument for Bitcoin was that it actually can develop that hedge aspect of it once you do have the regulatory clarity, and then all these funds that want to buy but currently can't have then that opportunity to come in. So the faster that happens, I think the faster Bitcoin can recover. And to me, I hold it separate from the main crypto space. I see Bitcoin as a standalone technology in that space, and I think it will be the preferred choice from fund investors.
Sven, are you a long-term Bitcoin bull?
Yeah, see, I was kind of a skeptic for a while. I've been teasing folks on Twitter, and I started. Yeah. Well, last year I started a conversation with Michael Saylor. We had a podcast in the summer. I kind of tried to poke holes in the arguments and so forth. And we had a follow-up conversation in the fall, and we had another follow-up conversation in January. And that's when I came around. Bitcoin had dropped 50%. We were kind of on the beginning of a larger market correction that obviously has continued to this point. One of the key arguments that works in my mind at the moment is the fact that, look, we had the 2000 tech, it blew up a lot of fluff, right? The pets.com disappeared, but even the Amazons and the Apples got hammered about 80 to 90% drawdowns. Absolutely brutal if you were in those trades, and you just basically lost all hope. But the fact is, these type of bear markets are actually long-term very positive, because it gets rid of the fluff. And let's be clear, we had a bubble last year, an all bubble and everything, right? Through all this massive liquidity that was thrown at markets. And so, yes, you got all kinds of not long-term sustainable business models that got a lot of liquidity, and we're seeing them blow up right now, right? That's what we're seeing. Creative destruction at its best. But then the key is to look at the new technologies that you then think are ultimately going to be long-term winners that have a global footprint opportunity. I see Bitcoin as one of them. So at the beginning of the year, I said, you know what? I'm going to use 2022 as kind of a long-term scale and opportunity, not as Northman trader, but Northman investor. So I'm going to use weakness, going to look at technicals. Where do I see key support pivots? And then ultimately, patiently, I'm going to say there's a certain percentage allocation that I would seek, and everybody can decide for themselves what that is. But I want to be there in a space, and I'm going to use weakness. So I didn't come in here and say, I'm going to chase rabidly into an asset bubble. Rather, I want to take a patient approach as an investment opportunity. And so I'm actually kind of welcoming all this weakness, right? Because hey,
if I could just jump in too, Rand. So I'm right on that same page. In fact, even though my downside target's around 12, 13, I've already started what many in the crypto sphere would call the hodl position, right? So when we got down to 19, and just like Sven's saying, is that I basically segregated a portion of my portfolio, and I said, okay, this is what I want to put in Bitcoin. And at 19,000, I put 1/6 of that to work. And basically in my head, I'm saying, okay, every 2,000 to 3,000 down, I'm going to add another 1/6. So the key here is I'm not going all in at one position, because, none of us know exactly where the lows will be, but I'm starting to dip those toes in the water. So even though my downside target is 12-ish, give or take, I think there's going to be an inflection point with Bitcoin and the overall stock market where the Fed starts to, ease again. And you're going to see Bitcoin take off like crazy at that point. So the idea here is, who knows where it bottoms, but I agree 100%. You just start slowly dollar cost averaging in.
Darn, I was hoping we could have a good disagreement.
Yeah.
Well, hold on a second. So you all talk about Bitcoin. What about like other cryptos? What about things like Ethereum or maybe even as you go lower down the risk curve, Solana, Cardano, etc.? Do you guys even treat those in the same bucket? Do you see them as higher beta versions of Bitcoin, or do you see it as a completely different asset class?
Well, I'm just on Bitcoin. I mean, it took me a while to understand that one.
So we'll get you into altcoins. Just give us a week or two. Gareth, what do you think?
So for me, I will dabble a little bit in Ethereum as a longer term hold, but I just don't have enough. So because these altcoins have a use case, I'm just concerned about their longevity in terms of, will there be another coin that has better technology that comes along? So I think Ethereum has established itself, but the other ones I'm not willing to commit yet to the long term.
All right, so we're going to take a quick break. After the break, I'm going to come back and we're going to talk about the best trade that you guys see in the next 30 days. So I'm going to give you like 30 seconds to think about it. When I come back, I want to speak to you guys about what trades you'd be making in the next 30 days. And then just to keep you guys accountable and honest, we'll get you back here in 30 days and we'll compare the trades. How's that? All right, let's do it. Let's give our sponsors some love. Remember, guys, the Friday Banters are brought to you by NordVPN, amazing sponsors protecting all of our crypto. Have a look at this.
This big Friday Banter is brought to you by NordVPN. NordVPN is a security product that every crypto trader must have as part of their essential tools. For crypto traders, NordVPN encrypts your personal data, hides your IP address, and enables you to access crypto trading platforms from any geographical location, giving you the freedom to buy and sell crypto completely anonymously. It also protects you from hackers and phishing attacks. NordVPN is super easy to use, offers security for up to 6 devices, and with servers in over 60 countries, is the fastest VPN out there. The promotional link below gives you up to 61% discount and a 30-day money-back guarantee on your purchase.
All right, DJ time. It's been great. The foreplay has been amazing, but now it's DJ time. Let's talk about trades that you guys would actually be putting into the market now. Let's talk about what you'd be doing. Can be crypto, can be anything else. Gareth, I'm going to start with you. 30 days. What would you be doing for the next 30 days? You told me you long Bitcoin. If I were to talk to you again in 30 days, what are we looking at?
So this is tricky because Bitcoin's already made a move up. I would love to pick Bitcoin. So are we looking for biggest percentage or just a solid trade?
Let's talk about a basket of trades. So it doesn't have to be a single trade. You could say long Bitcoin, long NASDAQ. You could say long Bitcoin, short NASDAQ. You could say short dollar. I mean, I'm just trying to get an idea of if you were.
I'll do short the dollar, long silver, and what the heck, long Bitcoin for the next 30 days.
Wow. Okay. Tell me about silver. Why your preference on silver? You just think it's been hit too hard?
Yeah, you just hit some key support on silver recently down here. So I'm looking at some good support. I think it's overdone. I think with the dollar weakness, you probably get a little bit of a snapback. I think that the fear of a recession, at least for the next month, probably fades after this jobs number. Obviously, the Fed later this month could change, but there's a lot of support on the silver chart right here around 19, which we already hit. We're bouncing off of it now.
Wow. Okay. So long gold, long silver, long Bitcoin. What was the last one?
Short. Well, I didn't include gold, but we'll throw it in there. Short the dollar.
Short the dollar. Okay, kind of makes sense. Mike, what are you thinking? If I know you're not a trader or you're not trading as much anymore, but if you were putting in a trade for the next month or so, kind of like what's your outlook? What would the trade be?
Short crude oil. I don't trade anymore. I so don't miss not having a 30-day outlook. My typical outlook is a year. And it's one thing I really appreciate about Northman and Gareth is the best traders know when to stop themselves out, admit they're wrong, and move on. And that's a lesson I've been trying to learn my whole life. So I think the most vulnerable market, the highest probability in the next 30 days is crude oil continuing to revert lower. I wish Gareth luck on being short the buck. You're fading a bull market. Good luck with that one. But traders are good at doing that. I like to, but in silver, good luck. I mean, it is cheap, but we're seeing the ebbing tide at the moment, and crude oil is just getting started. Commodities, I think, are just starting the greatest reversion since 2008 when they dropped 50%. And then they again did in 2011, drop 50%. And that's just what they normally do. They pump and then they dump.
I mean, I still don't get it because I'm still looking at Russia, Ukraine. We're no closer to resolution there. Yes, there is a slightly stronger dollar. I hear you. Yes, there is there's a potential of a recession, which is making people think that there may be less demand. But I mean, if you look at the trend has been up with commodities for a long time. Now, yes, we've just broken below the trend, but I mean, I can't see commodities collapsing, like you said.
So Northman touched on a little bit. The Bloomberg Industrial Metals Index was up about 40% on the year. Now it's down about 12%. Lumber is down about 40%. Even corn went down. Copper was up about 10%. Now it's down 20%. You know, it's just aluminum's down 13%. That's the normal thing that happens, and I love pointing it out. Remember, I'm a commodity guy. Used to have hair, and I don't have a bias other than to get markets right. And I enjoy pointing it out. And people say, "Yeah, but like you," I'm like, "Okay, good luck." The last time, right now, let's look at the price of copper. The first time it traded this price, this is around $7,000 a ton, was 2006. Imagine if we said that about Bitcoin, we wouldn't give a damn about Bitcoin. That's called an enduring bear market that bounced. Now it's going back down. The whole world's economics are collapsing. We're going to crush demand. And I've already seen peaking demand in the U.S., unleaded gas and diesel, and that's the guy who digs into commodities. And again, you never have a good trade unless you have people really disagreeing with you. If you agree with me, I'll probably be wrong.
Sven, what do you think? Do you agree with him?
Well, first of all, I appreciate Mike's comment about we all can be or should be humble about the fact that we can be wrong about any trade, especially in this highly uncertain macro environment with volatility across asset classes like all of us have never seen before, in the sense that they're just really across all assets. And July is going to be a key month because we have earnings, we have further inflation reports, and of course we have the Fed meeting. And of course the question is, what has been priced in, what hasn't been priced in? Is there relief on inflation or is there not? My view has been...
Let's slow down, just before you carry on, let's slow down for 1 second. So you mentioned three things. You mentioned earnings, you mentioned inflation, and you mentioned the Fed meeting. I think two of the three are pretty much spoken for. Fed meeting, 75 basis points. Yeah.
Yep.
Inflation, more or less where we're at now, 8.3, 8.4, 8.5. I think the market's looking for 8.3. I think the market's going to get 8.3. You said something else, which I think no one's really factoring in yet. You said earnings. Now, right now, we've had a price, in the PE formula, we've had the price being adjusted downwards. And that's how the markets have gone down. But I think no one's factored in much lower earnings yet. And I think that we may get some negative earnings surprises when people report now in July, and there's a whole lot of earnings in July. And I'm worried that we may get some very negative surprises that will reveal themselves in it. What do you think about that?
It's absolutely clear that earnings are going to be lower than what they were initially projected at the beginning of the year. Remember all the 5,200 S&P targets. That's not a question to me. I think the question to me, and I can't give you the answer on this, is how much is of this actually priced into stocks? I think it's fair to say we are obviously currently in a very clear trend, lower highs and lower lows, right? At the same time, I'm looking at signal charts that give me signals the likes of which we haven't seen in many cases since the global financial crisis, on the floor in many cases. And what that tells me is that we do have that potential. Let's come back to this, for a larger bear market rally. I'll give an example. NDX components below their 200 MA, along with the NDX as well, the oscillator, and I'll post the chart. I posted that chart on Twitter yesterday. The tech sector is tightening a wedge pattern as it makes lower lows and lower highs. We actually kind of started poking above that yesterday as the oscillator, and that's the chart right there, as the oscillator is on levels comparable to the COVID crash and the 2018 lows. In fact, it actually got a little bit lower of that. The NYSE chart, which I pointed out on Twitter a few times, hit key confluence support in June, which was the February 2020 highs, the 38.2 FIB, and the weekly 200 MA. So technically, that led to a bounce. Now, in 2018, we got these big bounces that went from, for example, the weekly 200 MA to the weekly 50 MA. That's a ripper move. And it proved then to be a classic selling opportunity, right? Because you have this negative positioning and then people are forced in, or maybe they get positive again. It's all psychology as well, right? And then you have to roll over for big new lows. And I think the question for all of us is this going to morph into a multi-year type bear market like we saw in 2000, with a recession still coming, or in 2008? Or are they able to wiggle through this by pivoting if inflation actually does come down in a dramatic way. And I see portion of inflation coming down very well, but obviously others not. And I think part of it is psychology, and the last part, which none of us control. They need a political solution on Russia, Ukraine, even though none is currently, at the horizon. But I'm completely speculating here. I mean, ultimately, politically, probably the way to solve this is for Russia to declare victory by, getting a hold of some territory, keeping that, and then everything kind of comes down. Because, and this is so politically important, Europe is facing a dramatic, terrible winter. The issues of gas supplies, oil supplies, food supplies, it's a global issue, but it's especially important for Europe. And they all have an incentive to figure something out on that front, because if we go into the winter with these conditions remaining, it's going to get ugly, and you'll see Europe in a recession for sure.
All right, so what's your best trade for the next month, 3 months? Where would you put your money?
We've been long equity since mid-June. I mean, from those lows where we re-added on the dip last week. We're slowly scaling out. We're not day trading here at all. We're slowly scaling out on strength, and the idea is to wait for signals to then maybe look at another sell short, which at this point we don't have. So right now for us, it's a patience game. And obviously, we know earnings is going to be the key. And look, if an Apple and Amazon or whatever, Facebook, they all have been hammered, right? All these stocks. And so downside is built in. Now, what happens with these earnings report? What happens with these outlooks? And how will the stocks actually react? I mean, everybody now expects lower earnings, which I agree with. But we don't know how the actual stocks react. What if they get bought? I don't know the answer to that. But all of a sudden, if the dollar then flips as well, you could have the ingredients for a massive bear market rally that can surprise all of us. I remain open to that. And that I also remain open to the fact that this can all flip over then for more dramatic lows later in summer, fall. So I think it's all a tactical execution game at the moment. But for now, we remain long. And by the way, just a final note on this. Have you noticed this week, all bad news is ignored? Even when the dollar rose higher, the equity markets didn't make new lows. Even when junk retested its lows from June, the equities markets did not make new lows. Today, the jobs report, you would have again thought this would give bears an opportunity to nail this thing down lower. And as we're recording, we're going back to green. What does that tell you?
As we're recording, we're going back to 22,000 on Bitcoin. Exactly, just hit 22,000. Here we go, back into green.
That's my point. Is bull markets end on good news, bear markets end on bad news, right? You know that old adage, right? And yes. So our bears getting weaker here, considering that there's been just more selling than we've ever seen in terms of equity capitalization is destroyed. We got to be obviously respectful of the trend, which is down. We have to be respectful of the signals. And obviously knowing that, and as I said, the trifecta, the yields, the dollar, and junk. And yields, to me, have made a major move in this last week with breaking its uptrend. I think that signals something. And to me, it all leads ultimately to a Fed pause, not them easing again. But again, it's all about expectations. And the expectation was 3.8%. They went from less than 1% for this year to 3.8% in 6 months in terms of expectations. And this is what the main message of the market has been: we cannot handle these higher yields. It was, as I said, 2018, 3.2%, 10-year was lights out. Now we got $9 trillion more debt. They want to go to 3.8%. Ain't happening without a major recession. So unless they want to crush the entire system, they're going to have to pivot at one point. I think they're looking for an excuse. You heard Bullard yesterday. He actually came out. Once inflation moderates, then we can talk about, cutting rates.
Yeah, Bullard's changed his tone. Bullard's completely changed his tone. He was the most hawkish, and he's come out and changed his tone. But listen, let's leave it on that note. I did mention that I've got some gifts for you guys. I meant it. I have got some gifts for you guys. So I decided to be creative about the gifts. So here's what I bought you guys. I bought you guys NFT domains of your handles. So I've got inthemoneystocks.nft.
Cool.
I've got McGlone.wallet, and I've got NorthmanTrader.bitcoin. So this is, well, I paid for them. I actually bought them. But this is one of our sponsors. It's called Unstoppable Domains, and it lets you buy domains with crypto endings on them. So things like NFT, Bitcoin, crypto, etc. And the reason why these are so amazing is because they can also act as a wallet. So you can ask people, instead of sending you money to your address, you can say, hey, just send it to MikeMcGlone.wallet or inthemoneystocks.nft. So if you want to be charging your clients, you say, hey, you want to pay us with crypto, just send your money to inthemoneystocks.nft. So I've sent you all of these. I'll contact you guys separately to give you guys these gifts, and you can use them and create your domains. And unlike normal domains, which you have to renew every single year, once you own the domain, it's yours for life. So that's just a gift from me. I thought I'd get you guys something more thoughtful. Gareth, I know you were expecting a prank, but I think I surprised you, right?
Well, thank you so much. I appreciate it for sure.
Amazing. So you've got inthemoneystocks.nft. Mike, you got MikeMcGlone.wallet. And Sven, you've got NorthmanTrader.bitcoin. And that's a good way for you guys to accept Bitcoin if you want to accept Bitcoin.
Thank you very much.
Appreciate it.
Cool, guys. And I appreciate you guys. Appreciate you guys being on Banter. The fam appreciate you. Thank you so much. Alrighty, thank you. Banter fam, if you will just hang on with me, I've got some great announcements for you. First of all, remember that this Friday Banter is brought to you by NordVPN, as always. If you want to sign up today. Use our referral link. The referral link is in the description below. You can protect your crypto for $3 a month. It's really the best way to protect your crypto. And we need to support NordVPN because they are big crypto sponsors and helping build the space. Also, before we go, looking at the Bitcoin price, I mean, you got to be bullish when you're looking at the Bitcoin price at, where is it? Where is my Bitcoin price? 21,873. Let's stay close because we may get a live trading show from either Kyle or Sheldon soon. Let's see which way those guys are going to be going. I'm going to continue to dollar cost average. Monday, we're going to be doing Solana phone giveaways with BYBIT. So make sure that if you open a BYBIT account, use our referral link. And then you'll stand a chance on Monday. Monday, I've got to give away 2 phones because I've been quite bad giving away these phones. So yeah, just make sure that you do sign up. If you are new to the channel and if you are new to YouTube, let me just show you where you can find all these amazing referral links and show you how to use them. So if you just click on our channel, let me just show you where you can. Okay, so if you click on the channel over here and you look at under the description and you see all the referral links. First of all, you got links for all the guests. You can join our crypto school for free. That's free that's more for people who are new to crypto. If you want the NordVPN deal, click here. You want to join BYBIT, click here. If you want to buy Unstoppable Domains, get 70% off. I think you're getting 70% off. Just click here. You can get your domains. And remember, with these domains, if you don't get your domain and somebody else gets your domain, then you'll never be able to get it. You'll be negotiating with terrorists, which is what I did. So, I mean, just go and get that. Alrighty. That is me for today. Remember, I'm here on Monday, and then from Tuesday, I'm going to be away for a week. It's a vacation with the kids. So Monday is going to be a big show, and then I'll see you guys again the week after that. Have a great weekend. Trade well, fam. See you next week.